Dan, let me begin with you. Are deals back, or are these just sort of moments of opportunity as seen by the acquirers and the sellers?
I think it's more moments of opportunity. You just happen to have a bunch of them this week, which is relatively unusual, particularly given that we're really in the dog days of summer. But overall this year, deal making in the U.S. is still down about 30% from last year, and last year was a rough year to start with.
You know, I was fascinated. The Rayo's owner, Sovos, is actually based in the town where I live. I didn't even know this. I didn't even know this. I had no idea. But anyway, Mike, let me ask you this. As you look at this, are we looking at a situation where deals are actually back or not? What do you see?
I think the atmospheric conditions are getting friendlier for deals if you go down the checklist, meaning markets have stabilized, obviously, in the last 10 months. Valuations are up to a level where, you know, maybe a seller would be interested or a buyer might have decent currency to use. Credit markets seem like they're willing to make deals.
But interest rates are a lot higher than they were.
No, exactly.
I mean, years ago, you could do a deal for 0%.
Right.
Now you can't.
Exactly. So you have to pick and choose. I would also, by the way, add the KKR private equity deal for Simon & Schuster. That was announced this week as well. So you do have private equity with a ton of ammunition to be used if they want. But yes, it's going to be tougher valuation-wise. CEO confidence is not really back. I mean, it's up off the lows, but it's well below, if you look at the Conference Board surveys, where you typically see it when things are really humming on the M&A side anyway.
Was there any big read-through for you, Dan, on the Tapestry, Capri deal?
I think the big read-through, again, you know, I do think these are kind of one-offs. In that particular industry, you saw a lot of kind of de-conglomerization over the last several years when it came to luxury retail. And I think we're now sliding back in the other direction. And I think the real question for Tapestry, that, you know, there's a huge loan on this, which, as Michael says, you know, suggests that the credit markets are back to a large extent. So that's good. On the other hand, there is a lot of debt on this deal, kind of the largest bridge loan ever. So I think you could see Tapestry do additional acquisitions on kind of some more orphan brands going forward.
It reminds me almost of the media industry, which has unbundled, and now at some point will probably rebundle. And to that point, we did get this ESPN news, more in the sports betting direction, but Disney, of course, the subject of much scrutiny. Do you think the next 3 to 5 years, it sounds like, could bring a lot of activity across the media space?
Across the media space, yeah, and even in the sports betting space. I mean, I think, you know, ESPN took a very long time to get here. I think when sports betting became legalized, everyone assumed ESPN would, at least from a brand perspective, be one of the first into the pool, right? It's ESPN. It took them so long because Disney didn't want to be associated with gambling. Now that it's coming in, it's going in with Penn, which has less than a 5% market share. I think in that space, which is a pretty good space right now in terms of the way stocks are going and just their revenues and even some profitability, you'll probably see consolidation the next couple of years there, because in addition to the FanDuels and the DraftKings and the MGMs and now ESPN, you also have Fanatics moving into that market.
So, you know, Mike, as you look at that particular deal, you know who the big dog here is. It's ESPN.
Absolutely,
it's not Penn Gaming. Had they merged with some, or not merged, this is not a merger, I should be clear. Had they done a deal with some other provider, whether it's DraftKings or FanDuel or whatever, it might have changed the scale a little bit. Here's my question, which I asked, I think it was Barton Crockett the other day. Does this fact that ESPN is now going into a partnership with Penn Gaming make it more likely that ESPN is spun off from Disney?
I think it's consistent with the possibility that it can be a separate entity. I don't know that it means it's decisively going in that direction or not, but the idea that ESPN looking for other sources of revenue, I mean, clearly everything Disney's been talking about.
As subscription fees go down and the cable fees go down, you've got to find a place for the revenue. The gaming is an obvious example.
And exactly. And, you know, people clearly are willing to pay for it. I think it's more in the matter of Disney, everything they're talking about doing, partners for ESPN, maybe with the leagues, it's to bring some cash in, reduce the capital burden on Disney, which is, of course, going to have to shell out for sports rights no matter what, and maybe have that business model get a little bit right-sized for what it could be in the future. Penn stock, by the way, punished, you know, on the news. So it tells you which way the economics of it ran. And also, that's another factor in, are other CEOs going to want to do a deal?
Right.
Look at how your stock reacts.
Iger himself hinted, they made us a good offer. I think they're paying $1.5 billion over 10 years, you know, for the privilege. Dan, want to talk IPOs? Because it sounds like we might be getting some in September. Birkenstock. You know, listen, the fact that there was an article this week saying that NYSE and the NASDAQ were battling for listings, hey, that's got to be a sign.
For Birkenstock?
Yeah, for all listings.
It's a sign. I mean, it's also a sign that bankers are kind of talking this up. Look, I've been writing and I keep believing that the IPO market is going to come back after Labor Day. You know, you see the kind of sustained success of Kava. It makes sense. You have this huge pipeline of prospective issuers. You got Birkenstock, obviously ARM, and a couple of those will go. I will say, though, now that we are where we are, the 10th or the 11th of August, I'm a little surprised we haven't seen more S1s, those prospectuses flipping public, because it does take about 6 weeks to get this thing together. And if you want to be going in the middle of September when everyone's back from vacation, now is when that S1 should be coming out. And we've seen almost nothing over the last couple of weeks.